Well, at this point, I think it seems like a very local event that should be contained to Turkey. Clearly, when you have a situation like this, investors naturally look around to see if there are other countries that share some of the characteristics that Turkey has. And while that may be true in terms of high levels of public debt, reliance on external financing, I think the fact that the U.S. and Turkey are engaged in a period of political tensions makes the situation with Turkey quite
Yeah,
unique.
it's very similar to Greece. When everything with Greece was going down, it was well, why do we care about Greece? Well, maybe we don't care about the Greek economy on its own, but it's the two things you just mentioned. It is the high levels of debt ratio to GDP, and it is the current account deficit. It's a lot of the debt that is priced in currencies other than the Turkish lira. So how confident are you this will be then contained?
Well, fairly confident, but I think it's understandable why in this type of environment investors are taking a more cautious approach. And I think that might obtain until we see Turkey engage in some more traditional types of measures to stabilize the currency and regain investor confidence.
Okay, GDP just coming out a few moments ago from the eurozone, 0.4% for the second quarter, 2.2% annualized. Those aren't great numbers. They're not terrible. How do you read them?
Well, having not seen the details, on the surface, that type of annualized number coming out of the eurozone is actually quite good relative to trend growth. And just on the surface, without seeing the details, it puts to rest some of the concerns that we've had about slowing growth in Europe.
Okay, and then do you think that Turkey, the eurozone, the trade spat with China, does that influence or change our Federal Reserve? Does the Federal Reserve here pull back on possible rate hikes because, well, we just don't know what's going to happen with this stuff? Let's ratchet it back just a bit, Stephen.
It's always a possibility. I think that the Fed has its projections going forward, but it's always going to be thinking about what are the balance of risks in the world, and they do tend to take a risk management approach. So there might be an event that has a small probability of happening, but if the impact of that event can be very, very significant, it can lead to a change in policy. I'm not convinced at this stage that we've seen any of those types of risks on the horizon.